So let's begin, right? Okay, so what you need for to start is, so I'm trying to see how I can make this very simple for you so that you would have that foundation. So first, you need to have a broker, okay? And you already have
Mm-hmm.
even a
Yes,
live account. You have
I,
a broker.
mm-hmm.
Perfect. And then the second thing is you need trading view. So um, do you
I have
use
it.
do you use trading view? Yeah, good. And
Yes.
you also need um, for fundamentals or to track news and all that, you need like Forex Factory or um, those things. Yeah, you need Forex Factory, Bloomberg, but Forex Factory is fine. Okay.
I don't know about that one.
Yeah, you can just go to Google. You can also download the app. This is Forest Factory. Yeah,
Mm.
so that helps you to track the news. Every day there is news, especially if you are trading the Forex pairs itself, the Forex
Mm.
pairs. But if you are on synthetics and those derivative pairs, you don't need this. But so you need this, and you just type Forest Factory, search on Google, and then go to the site. This is how it looks. Okay. So you need this to track the news. You see all the folders that are here. Um,
Mm-hmm.
today's date, today is here, October 17. Um, and then if the folder is red, it shows that the news is having like a higher impact. If the folder is not, I mean, red. So the most important thing is you have to see if there is any folder that is red. Then and the
Mm-hmm.
time. So that will really impact the pair you are trading. Let's say you are trading gold or you are trading Euro USD, US 30, or any of the assets or stocks or even Forex major pairs. They all are affected by certain kind of news. And that is more of fundamentals like or sentiments. But always the technical analysis um, is kind of the top priority for most for most forex traders, the technical analysis. Because even if news comes in, news shortens the time it takes for the market to move. So news brings volatility, more liquidity. News brings more volume so that the market will move, and it will always move, okay, and open or close within the technical analytical frame. Okay, so news doesn't defile the technical analysis. Sometimes it might go to the extreme, but it will always correct and map up with all the psychological levels and the technical ranges that the market have to fill or move. Okay, so the most important thing right now is if your technicals are right and your personal risk management and psychological state or mindset is okay, then you might not worry too much even about news and those things. Good. With that said, so I've said that you need a broker, which you have. You need trading view to analyze. This is derivative trading view. You can also get trading view itself by just typing trading view on in your Google search bar, and then you click on it. You don't need the paid version right now. Probably when you need more advanced tools, you can get a paid version. But you just type it and then look for super chat. And then from super chat, you can now get your select any pairs that you want. And it seems like you also have or know how to get trading view already, right?
I have trading view. Then there's a link that they sent to me that this deriv.com. I'm accessing it through a link. So then I have a problem there that how do I how can I have that link on my screen so that each time, because it shows that when I want to access that thing, I must go to the person's page that send me that link.
No, you don't need any link to access TradingView. Just type tradingview.com.
Deriv.com.
Yeah, just type deriv like where I am,
Mm-hmm.
deriv.chat,
Mm-hmm.
deriv.chat.
Mm-hmm.
And this, it comes on the Google search. You click on it, and
Mm-hmm.
then you have the chart. So you can select any volatility pairs or step or zoom, um, whatever pairs you.
Okay. Each time I want to do an analysis, I should go back to Google and type there.
Yeah,
Okay.
just come here and then type that. So let me choose like 50 index. Yeah, I just chose a pair right now. Okay. And it starts you from the 24 hours. You can move to, yeah. So how to learn or navigate trading view itself is a whole different thing that you have to learn. But that's not
No,
what the
I know
people.
most of those things. I know most of those navigations.
Good. So, but you need a computer to really be able to analyze
Mm-hmm.
well, though you can still use your phone to view and do all those things if you know. And these are things that you can even ask ChatGPT to teach you anything you want to do or you don't. You can ask about those questions to ChatGPT. GPT will help you out with some tips. Um, so these are the, tools that you need to get started. So in terms of technical analysis, there are a lot of strategies and a lot of concepts that people put together to trade. What I would
Mm-hmm.
tell you today is I'm going to introduce you to three important concepts that I believe that if you learn, you have a good start. So number one,
Mm-hmm.
I would like you to learn um, price action,
Mm-hmm.
typical price action, what price action means or what it is. And within that, I would like you to master market structure.
Mm-hmm.
Okay. And then let me increase the font size. Okay. Can you see what I'm typing? Are you able to see what I'm typing?
Mm-hmm.
Are you able to
Let
see?
me see.
Yeah. So, and
Yeah.
then you need to master market structure. And then you also need to understand support resistance.
Mm-hmm.
And the third one is how liquidity works, okay, in terms of how it is distributed, this how it is distributed, how liquidity hunts or grabs happens, or what shows that there is a hunt, there is a grab, how liquidity is being deposited.
Okay.
And with this, one other thing that I would advise you to learn is learn the most important, oh, sorry, chart patterns.
Mhm.
Chart patterns, and also the candle sticks, which I believe the that that initial mentorship you are doing should be able to introduce you to the different chart patterns and the candlesticks from like patterns, like those morning star, different types of candlesticks. Okay. They should be able to teach you. You should be able to learn that from them.
No, I know those ones. I know.
Good, perfect. So, but the most important thing right now is the three: price action itself,
Okay.
support resistance,
Okay.
and liquidity. Okay. So
Mm.
let's
Go and teach rice and eat.
so this is what I would say you should learn. So let me take a little bit of time to take you through. Um, so let's start by asking. I mean, I'm trying to show you how you can learn yourself also.
Yeah.
Yeah, so let's just ask chat that please give me a simple definition of price action. So what is price action? So it says that price action is the movement of price over time. And that is what is shown on the chart. Um, so typical
Million percent okay.
price action is without using any indicators. Okay.
Mm.
Um,
I'm having lots.
yeah. So price action is typically like the pattern of price. Okay. The pattern of price, how price makes highs and lows, and the way that the candlesticks opens, closes, and the way the candlesticks looks, okay, on the market or on any chart that you see. That is what price action is. So now we know that price action is you don't need any indicator, you don't need anything, but you just want to study the raw chart to look at the way the chart is moving, how it is making highs and lows, how price is making highs and lows. Okay, are you getting my point? Are you with me? Okay, good. So let's take, for example, this small session of this volatility 50 index here. Let's take just the shaded portion, okay? Where I have shaded. Are you seeing that place?
Yes, I'm seeing.
Good. And then let's go to, this is a 4 hour time frame, but let's go to um 1 hour. Good. And let's look at how we can understand price action or even market structure from what we see here. So here we can see that if you look at this chart very well, we can see that price was up here and it came down, okay, to this place. Okay, it came down to this place. Then we saw that it moved up to this place and then also from there came down to this place. Then from here it moved all the way up again, came down, and then moved up, down, up, down. Okay, so that is what the movement of price is being shown, like is on the chart, and that is price action. Okay, you don't need any indicator to understand this. By looking at it, typically you are seeing how it's moving. Okay, so let me draw the movement of price as it came from up. It came from up here, made a low, made a high, lower high. Because it's descending, it's going lower, lower. So we need lows and lower highs. We need lower low, lower low, lower high. We got a lower low here. Then we got a higher low, lower high, higher high, lower high, higher high. Then we have and prices now here. So this is the pattern that we have right now. See the way it looks. Okay. So the highs and the lows, the high point and the low point, the high point and the low point. That is what we look at when we are dealing with price action. Okay. The highs, the lows, lows, highs, low, high, low, high, low, high, low. Okay. So that is what we look for. Now, when we talk of market structure itself. When the market is going low, low, low like this, we call it a downtrend. And then when it is now moving up, up, up like this, we call it an uptrend. And when it is moving sideways or consolidating, for example, like what it did here before the breakout, we can now call it um, a ranging market. Okay, so in an uptrend, what should we see? We should see what we called higher highs and lower highs. And you can monitor that even using a trend line. Many people do that like this. Okay, so inside of this here, you can see a high, lower high, higher high, lower high, higher high. So this price action here is an uptrend. Now, at what point are we going to say the uptrend has been violated within this internal structure here? When the last lower high, which is this area point, has been violated. When price moves from up here and it violates this. When it takes this out, then we can say price is trying to break to the downside or is trying to change to a different direction from the initial uptrend. But when this happen, okay, it doesn't mean that because the last lower high is taken out in an uptrend, then we have changed. So we will now start selling. No. The higher high point that it gave us before it dropped to take the lower high, the last lower high, must act as a protection. If price goes up and it doesn't take this out, then and then still comes down, and then gives us another break of the low that it gave us, then we are totally going to say that there is a change from that uptrend to the downtrend. But if price goes up and then it takes this high out like this, okay, the basic understanding is that price only use drop to take this low out as a liquidity grab. Are you getting what I'm saying? Okay. Why liquidity grab? Because in an uptrend or psychologically in the market, all the lows will act as support, like here, will act as support. Okay. The lows will act as support for market participants to be buying. Okay, when people buy, they put this place will act as support. So from here, you can see price moved. Price comes down, make a low to form a support or find support and then go up. So price will drop and they put stop losses below. Some people are also waiting to sell below the support. Price will come and grab all the stop losses or hit the stop losses below the support and also fill the orders. Okay,
Therefore, where for so
fill the orders, the sell orders, and then fake them out and hit their stop losses above the support also, and then push back into the range and then keep going up. So it is only